So without further ado, let's welcome Dwayne Stein. Hey, Dwayne, how are you today?
Fantastic, Gregory. Great to be with you again.
Yeah, I'm glad to have you. And this is actually a good time to have you on with so
Yeah.
many things being talked about in the news. We've got the Fed that also recently dropped the interest rate another quarter point. The market's kind of worried going forward about whether or not, because of lack of data, whether or not we'll get one more quarter point drop. I think we will. But the Fed doesn't call me up and ask me my thoughts.
Right.
But
Right. Right.
but I but there is worry about whether or not that's going to happen, and I kind of think it needs to. So tell us what your thoughts are from
I,
interest rate standpoint.
yeah. I think what the Fed being the government now shut down being over with. I think now it turns to what data haven't we gotten. Gregory, I hope you're right. I'm a little bit in a little different. I guess I would say. What do they call it? Like I'm in a different group here on I I feel like maybe they're gonna stand pat, but gosh, I hope you're right, Bob. I really do. I just think I don't think they're getting enough data. I think this shutdown will be an easy. Hey, we didn't get what we needed to be able to see it, right? To be able to make a good informed decision. So I think they're going to hold pat on that. And what we're seeing right now, Gregory, I could tell you over the last couple weeks is it's ever since really he came out and said he was not sure if he was going to cut in December or not. Um, we've seen the rates, and again, you and I talk about this all the time. You can't time the market, but we've seen the rates trending up a tad. I mean, look, a month ago, the rates were 6.19 on a 30, and now they're at 6.38 right now. So when you hear that over a month, you go, oh my gosh, that sounds like quite a bit, but it's going up little by little, right? Every week is 5, 8 basis points, but that 30-year has creeped up a tad. And now it's still low, and it's comparable to earlier this year, but we've seen it creep up, and I think it's just the uncertainty is why right now the 10-year Treasury, stuff like that, there's a lot of things. There's just a lot of uncertainty, so we're seeing the rates creep up a tad.
So what we've seen in conversation is one of the things that kind of surprised me, and I'm going to ask you to state this because you kind of know. What is the average age of the first-time home buyer now? I was kind of surprised at this stat recently.
Yeah, well, the first-time home buyers, late 30s. The median age now of a home buyer is up to like 59 years old. It's crazy, right?
A
When you hear
first
that.
time
Yeah,
median?
first-time home buyers up in the 30s. Yeah, it's crazy.
Well,
It's crazy.
we need to help folks change that.
Correct. Yeah.
I don't quite understand
Yeah, and I
why
don't
it's
see that,
being
but
put off.
I agree, and I think that it's an affordability thing. I think I think what we've dealt with over the last couple years, Gregory, is the old FOMO, right? People feel like you and I have bought houses for years, and the if you go back through historical times, you're looking. I mean, a 6, 7% mortgage rate is pretty much the norm. But when you throw in those 2, 3s, and 4%, it becomes where people think that's the norm. And I think the holdout now for this and is causing folks to just wait and, maybe student loan debt. There's probably a lot of factors. Now,
Yeah.
our market here, Gregory, I don't see that because I think for us, while affordability is an issue everywhere, my average age is first time home buyer is not that, right. We're more in the late 20s, which is I think I'm a lot glad I don't have to wait 10 years to help everybody else out for sure.
Yeah, I was just thinking back. I was probably first time buyer in my late 20s, but I had
Mm-hmm.
started well before then thinking about it. I didn't have college debt, and I don't know that. Gosh, I'm 65 now, so we're going back several decades there. But even thinking about borrowing money and such, that wasn't on my radar. But knowing that I, I wanted to have continuing education after high school, and one of the things I did was join the Army. So I kind of, because of being in the military, I had certain things that helped me with that. And even friends were like, I remember one of my friends, Gary, he said, like, how are you doing this? Because I'm having to do these different side jobs and all to get through, and you don't seem like you have to do as much. And I said, hey, the military's helping me
Yeah.
pay for this as I go. And so next thing you know, he's joined up, and then another friend joined up. Why? And it impacted their lives in a positive way as well, continuing to school and having. And Gary, for example, went on to a career in the military and became a helicopter pilot.
Oh,
I
wow.
actually had a goal of flying helicopters, but I'm colorblind, so they wouldn't let me do that. So that's kind of like, well, that changed my path because I became intrigued with financial services and moved in that direction because of my love of compounding interest. But one of the things we have to think about, two things I think is important. We need younger people to try to get into home ownership, and they are
Yeah.
talking about, home prices are going to come down and so much, and that's being put out there by news media,
Yeah.
but I don't
It
know
is.
that that's necessarily going to be the case. It
Mm-hmm.
isn't like we're going to have all of a sudden a huge supply come available and push
Right.
down the prices. I just don't see how that's happening. But what we do need to do is get the younger people geared to thinking about not miss the opportunity of equity growth over time. That's kind of also like, well, why would I put money in IRAs? Why would I start doing a Roth now? Why would I start investing even a small amount? I'm just getting started in life. I've just finished college or I've just gone to work out of high school. Why would I start saving now? Why? Because compounding of growth, compounding interest. You miss that, you can't make it up. You're forever behind. So wherever you start is where you start. But if you start earlier, you're going to have more. So with that said, we have to think about real estate in that way. Got a
Absolutely.
little surprise here. We got some music coming through, so obviously we're going to take a short break, Dwayne, and for the listeners. Okay, well that stopped. Okay, that's good.
Hey,
Let
we
me
make our
reset
own
my
rules up,
thoughts
Gregory.
here.
We do what we you do what you want. You've been on it. You do what you want. You want to just keep going, we keep going,
Yeah,
you
we're
know?
going to take a break at the bottom of the hour. I kind of like rolling through because you and I get going here.
Yeah.
But you see where I'm going. That is, they
Yeah.
need to start thinking about how do I get into real estate now. And one of the things is, yeah, you're incurring debt, but debt is something that's going to go down over time because you're going to make monthly payments on
And
it.
there's good debt, Gregory.
Yeah, go
Owning a
ahead.
home is good debt, right? And I think one of the things that keeps a lot of and it's sort of that generation where, well, you got to put down 20%. And a stat I just read that came out in an article I read that National Association of Realtors put out is the highest since 1989. First time home buyers are put down 10%. I think a lot of, and everybody doesn't have the shows like we've got, right? And to teach them and educate them on you don't have to put down 20%. I don't like seeing 10%, right? So a lot of this is people are trying to save or thinking I need more. And it's kind of like going, hey, I'm going to wait till I save enough money to have a child. Sometimes you just gotta. You're never gonna have enough. And when I see this on first-time home buyers being at 10%, and that's the highest since 1989, that's a big number. And I think it's a lot of just the education that's out there and making such a difference on maybe folks waiting a little bit more, right? And I think those are the things, when you look at that, is a big, big difference. So, it's a lot. Look, it's a lot, but those numbers I don't think we deal with as much in this market. But like you said, it's explaining and educating and showing the value of home ownership, I think, is just so important, right? It is so important. And then when you look at, Gregory, here's something else too. Repeat buyers put down a median of 23%. That's also the highest since 2003. So, Gregory, you know what that tells me? A repeat buyer puts down more than twice the amount as a new home buyer. So if that's not a banner for why home ownership is amazing, it's that right there. Because they're putting down that money because when they sell their home, they're taking that equity and they're either a move-up buyer or maybe even downside, but they're taking all that money they made because of that first step, that investment they made buying that first home, and putting it into the next one. And then guess what? When they move the next time, they'll put even that much more down. And little by little, you start building more wealth with using less of your money and letting the home work for you, but it's got to start somewhere.
Yeah,
and I think
it does have to start somewhere, and that could be for your first home doesn't have to be that big house. It's got to kind of be that starter home, and that means something that you can afford. With that said, you've got to make some good decisions regarding location, affordability, and I always define this, but I think you should be making a purchase based upon curb appeal. Yeah. I don't want to buy an ugly home that I can't dress up. I can't make look nice from the curb. If it's going to be forever ugly, you need to go buy something else. That's just the honest way I look at it. But it might not be the right color, but the color can be changed. The lawn and shrubs can be fixed up. It just needs to have that nice first appearance. It needs to be affordable because you're also buying something that's going to grow in value over time. And and look at the stat you just gave on being a second-time home buyer means they've got more money to put into the next purchase, so it means they can buy more. Yeah. And change, adjusting to how they've evolved in life. And it's also not a bad thing if you're in that home forever either, because you're building equity there and it's growing in value. But when you think of wealth building, there's two parts. I think it is having property, having the right home, but it's also investing and putting money away for savings and market growth long term. And you kind of have to work to do both. You can't forsake one for the other. Yeah. Your thought?
And I agree with you 100%. One of the things I want to share with your listeners as well is this. I can't, as a lender, I can't give you something you can't afford. You can't call me and go, I want a $500,000 house, and you've got $100,000 student loan debt and you make $40,000 a year, and tell me I can't afford that. I already know that, right? So I can't put you in a home you can't afford. Now, with that being said, when I'm having conversations with my clients, is I understand the difference between what I can afford and what I'm willing to pay. Right, Gregory? There's a big difference there as well. But what I want to be able to show people is don't base everything on, the old days. And if I had 20% to put down, or if I only had I talked to a client this week, Gregory, who is like, all right, so if I put down another 10 grand, how much is that going to save me on my monthly note? And I said, $53 a month. So it's not, so that's where you've got to help explain to folks, you having that 10 grand in your pocket versus putting it in your home, that the only way you get out is to sell your house or to refinance it. To get your 10 grand back over $50, it's not worth it, especially if we're not in a situation where that $53 is making a difference of you being able to buy the home or not. If we're getting
that is a good point,
right? We're having a conversation of
yeah.
you can't afford this, right?
Yeah.
So those are the things, having that understanding of, oh, I can't afford that. And so many people, by the time we get off the phone and we go over their application, they're like, oh my gosh, I didn't realize I could afford that much. So that's the understanding of, but it's like you said, it's that first step, it's that conversation. But I can't put you in something you can't afford. So you've got to be able to rest at ease with that.